Welcome back to Investing Talk Podcast.
Today we're looking at Roku. The big question is it a good time to buy now? And this analysis is really for you, the listener, looking for those actionable insights.
We definitely want to hear from you. Subscribe, like, and comment. It really helps support the show. And hey, if there's a specific company you want us to look into, just leave it in the comments below.
So let's get into the analysis. Let's start with the recent turnaround. There's been this big shift in momentum everyone's talking about.
Yeah, that shift really kicked off right after the Q3 earnings report. That felt like the aha moment for Roku bulls, didn't it?
Absolutely.
They posted earnings per share EPS of 16 cents, which, totally blew away the consensus estimate of just 7 cents.
Right. And revenue was solid, too, up 14% year over year, hitting $1.21 billion.
Solid numbers.
But, the headline numbers aren't even the full story here. What really stood out, the truly groundbreaking part, was the profitability signal. For the first time since, 2021, Roku's operating income actually turned positive, $9.5 million. That completely changes the narrative around the company.
Hold on, let me just pause on that for a sec. Are you saying Roku isn't just, a hardware company anymore?
Yeah.
Like selling devices cheap just to make money on ads later?
Exactly. That's the crucial point. This positive operating income, it shows their cost strategies are working. It shows the platform revenue is strong enough now to carry the whole business.
Right.
They look much more like a profitable ad platform now than they did even a year ago.
Okay.
And if you connect that to the bigger picture, you see why analysts reacted so strongly. Pivotal Research, JMP Securities, they immediately boosted their price targets.
Yeah, I saw that, to $120 and $145. Big jump.
Huge jumps. And it makes sense when you look at the engagement numbers.
Right, the platform stickiness. The sources mentioned record engagement. Total streaming hours hit, 36.5 billion.
Yeah, 36.5 billion. That's up 4.5 billion hours just year over year. It's massive.
Yeah. Wow. So people aren't just buying Roku players. They're actually, living on the platform.
That's where the real competitive strength is, that stickiness. And the Roku channel itself, their own ad-supported service,
Yeah.
It's now the #2 app in the entire U.S. That's huge. It shows they're monetizing really well, and they've got this vertical integration thing working.
Content's clearly king there.
Yeah.
And management seems pretty confident they can keep this going, which is always a good sign, right?
Definitely. They revised their 2025 outlook upwards. They're projecting platform revenues now at $4.11 billion.
Okay, and that's 17% year-over-year growth.
17% growth, yeah. And importantly, adjusted EBITDA, earnings before interest, taxes, depreciation, amortization, they expect that around $395 million. So they're really focusing on generating cash now.
Makes sense.
And they're also trying to support this ecosystem, especially with the holidays coming up. They launched those Roku Select Series TVs up in Canada.
Ah, okay. Diversifying the hardware.
Right. Device margins might be lower, sure, but it boosts the brand, gets them into more homes, basically controlling that entry point to the stream.
Okay, so that's the turnaround story, the operational success. What about the fundamentals? Does the balance sheet actually support this momentum?
Fundamentally, yeah, the foundation looks strong. First off, revenue growth.
Yeah.
That forecast, $4.11 billion for fiscal 24, that's an 18% jump year over year.
18%. That's pretty impressive compared to peers.
It really is. They're outpacing most others in streaming hardware and ad tech. Looks like they're grabbing market share, even with all the competition.
And critically, what about profits? Are they actually getting closer?
Much closer. They've managed to cut their losses dramatically in FY 2024. We're talking an 81.77% reduction.
81%. Wow.
Yeah, the net loss is down to about $129 million. Now, look, that still sounds like a big number on its own. But compared to their overall size and cash position, it's way more manageable. It's much less of a liquidity risk than it used to be. They're showing they can control costs while still pushing for growth.
Okay, and speaking of cash.
Yeah.
How stable is the balance sheet overall? Can they handle, say, an economic bump?
Seems quite stable. Roku's got a solid balance sheet, market cap around $16.1 billion. They don't have much debt. And according to the 2024 10K, that's their big annual report for you listeners, they have over $1 billion in cash and investments.
Okay, so plenty of cushion.
Yeah, that liquidity means they can likely weather downturns or, keep investing in strengthening their platform moat.
Let's talk about that moat. What really gives them an edge against, say, Google or Amazon or Apple? They all have streaming devices, too.
I think their big advantage is being independent, right? And they are the leader, the top independent TV streaming platform in North America. Their moat, it's built on Vertical integration, they make the hardware, they own the operating system, and they run the ad system on their platform. That deep control over the whole user experience, plus those strong advertising relationships they've built up, that makes them really valuable and pretty hard to just push aside.
Okay, that makes a lot of sense.
Mm.
Let's switch gears then. Let's look at the technicals, the stock chart. If the fundamentals are improving this much, is the chart reflecting it?
The technical picture actually looks pretty bullish right now, though you always have to watch those resistance levels. The stock's in what looks like a classic bullish setup, meaning it's making higher highs and higher lows. It rallied strong from around $73 up towards that recent high near $110.50. And for momentum traders, it's important that it's trading well above both its 50-day and 200-day moving averages. That's usually seen as healthy.
Okay, so for people watching the charts at home, what are the key price levels they should be aware of right now?
Well, near-term support seems to be holding pretty well around that $97 to $100 area. That's kind of a psychological level. Plus, the 50-day moving average is right there, too.
Okay, support at $97 and $100. And resistance?
Resistance looks like it's in a tight range, maybe $108 up to $112. It's bumped against that level a few times. If it can break out convincingly above $112, that could signal more upside.
And based on current momentum, what's the sort of range we might expect over, say, the next 3 months?
Given the momentum and some potential catalysts coming up, the technical forecast might suggest a range somewhere between, let's say, $95 on the low end and maybe $120 on the high end for the next quarter or so.
Gotcha. And you mentioned the RSI.
Yeah, the
Right.
Relative Strength Index, the RSI. It's running moderate right now, sort of between 55 and 62.
And why is that significant for investors?
Well, it's key because it suggests there's strong bullish momentum, but the stock isn't extremely overbought yet. When RSI gets way up above 70, that often warns of a potential pullback. Being in that 55 to 62 range, technically, means there could still be room for it to run before momentum traders start thinking about taking profits just based on the chart.
Okay. And it sounds like investor sentiment generally lines up with that technical picture.
It really does. Analyst consensus is quite positive. Out of 28 analysts covering Roku, 17 rated a buy, and another 2 call it a strong buy. That's pretty broad support.
And institutional ownership.
That increased noticeably in Q3 2025 as well. When you see big funds increasing their positions, that's often taken as a major vote of confidence. They do their homework.
Okay, so, wow. We've laid out a really strong bull case here. Profitability improving, solid balance sheet, market leadership, positive technicals, good sentiment.
Yeah, it sounds great, but this isn't a slam dunk. It's not a 10-10 perfect situation. We have to be critical and look at the risks, the reasons for caution.
Right, and the biggest kind of glaring contradiction in this whole story is the insider selling, isn't it?
It is.
Despite all this great operational momentum we just talked about, the CEO and the CFO both sold shares back in August 2025. That definitely raises a flag for investors. Like, why are the insiders selling if things are looking so good?
Yeah, let's spend a moment on that because insider selling always gets attention and it's often a red flag. You have to ask, why are they selling? Is it a huge dump, like they think the stock's peaked?
Or is it just regular selling?
Or is it, smaller scheduled sales maybe for taxes or just diversifying their own holdings, which can be normal? The sources suggest these sales were big enough to make people notice.
Okay.
It implies that maybe some in management thought the current price was a decent level to take some money off the table. Perhaps they have longer-term concerns, maybe about market saturation eventually, even if the near-term growth looks solid.
So that's the tension, right?
Yeah.
The numbers say buy, but the insider moves say, maybe take some profits, definitely warrants caution. What other core financial risks are still out there?
Well, first is just sustained profitability. Yes, losses are shrinking fast, which is great. But if they slip back into heavy spending or if platform revenue growth slows down unexpectedly, those losses could start pressuring that nice liquidity position again.
Makes sense. What else?
Second, and this is really important, is their reliance on the advertising market. It's pretty volatile.
Right. AVOD. The A is for ad-supported. That's the main engine now.
Exactly. A big chunk of their platform revenue comes from ads. If the economy hits a rough patch, ad budgets are often the first things companies cut back on.
Yeah, that's a risk for sure.
So Roku's impressive revenue growth depends heavily on ad spending staying strong. And finally, there's still the challenge of those declining device margins.
The hardware side.
Right. The platform side is doing great covering for it now, but fundamentally selling the devices is a tough, low-margin, super competitive business. They have to constantly optimize costs just to keep it afloat.
Okay, so we've got the past successes, the present risks. Let's look ahead. What are the key catalysts listeners should be watching over the next, say, 3 months? Any specific dates?
The biggest one coming up is definitely the Q4 2025 earnings report. That's scheduled for January 31st, 2026.
Okay, Jan 31st. Why is that one so critical?
Two main reasons. One, it'll give us a really clear picture of ad momentum coming out of Q4. That's usually the biggest quarter for ad spending.
Right, holiday season ads.
Exactly. And two, it'll show how well device sales did during that crucial holiday shopping period. That gives us a clue about future user growth for the platform.
Okay, and are there any indicators before that, maybe in December?
Yeah, there are a couple things to watch. Look out for the holiday device sales reports. They often come out around December 20th. They give you an early feel for how Roku's devices competed against others, like those new Canadian TVs.
Good leading indicator.
And also, keep an eye out for the institutional 13F disclosures around December 12th.
Okay, remind our listeners what 13Fs are.
Sure. These are filings that big institutional investors, like hedge funds managing over $100 million, have to make every quarter. They show what stocks these big players bought or sold in the previous quarter, in this case Q3.
So we can see if the big money was buying or selling Roku.
Exactly. It gives you a sense of their conviction. If you see a major fund significantly upping their stake, that's usually seen as a pretty bullish signal.
Got it. Okay, those are the scheduled events. What about more speculative stuff, things that could cause a short-term jump?
Well, acquisition rumors never seem to fully go away with Roku.
True.
Given their huge user base and that integrated ad platform, they always look like a potentially attractive target for a big tech company, maybe like a Comcast or a media giant wanting a stronger digital presence.
Any other potential catalysts?
Analysts also talk about maybe faster international expansion. After launching TVs in Canada, maybe they'll target Latin America or Western Europe next year. That could really open up their potential market size.
And content deals. Always important for streaming.
Absolutely. Any new exclusive content partnerships or maybe some high-profile original shows for the Roku channel that helps them stand out from competitors. More exclusive content usually means more ad views and reinforces that platform stickiness we talked about. So if we were to sum up the investment thesis here, Roku's showing really impressive revenue growth. Margins are moving in the right direction quickly, and you've got strong backing from analysts and institutions. It looks interesting both for maybe short-term trades playing these upcoming catalysts,
Right.
and potentially for longer-term investment, betting on that big shift to ad-supported streaming and Roku's strong position as an independent platform.
Okay, so it boils down to this. We've got really strong bullish signals, right? Fundamentals, technicals, path to profit looks clearer.
Yeah.
But we also have that pretty significant caution flag with management selling shares, even as things look good operationally.
So I guess the key question for you, the listener, to really dig into is, given that conflicting data, what does that insider behavior really tell you about the long-term potential? Is there a saturation point coming eventually versus this immediate, really strong growth path we're seeing right now? That's the puzzle to think about.